Okay, folks, welcome to a review of our recent trade of AMZN.com, which we shorted. We shorted the shares on February the 5th at $1,451.04. We booked profits on the 5th at $1,342 for a 7.5% gain on that trade. Now, I'm going to walk you through the reasons why we opened up the trade on the 5th and why we closed it out as well in a moment. But first, what I want to talk about is the why. Why did we decide on going short of a stock that was either trading with or outperforming the S&P 500? That was a big gamble, because when you're shorting a stock, you really need to have an edge over other traders. And I believe that that edge was the fact that Amazon was being propped up in advance of earnings, and that as soon as earnings were announced, you'd probably see a spike and you'd probably see selling into that spike, and that's exactly what transpired. So before we go into the reasons why we entered and why we closed, let's first go over some of my analysis of how Amazon was trading on January the 30th, and then again on February the 3rd, just prior to us opening up our short position. If you want to watch these videos in their entirety, just simply type in the AMZN symbol into the search box on the vlog, or you can find it posted on YouTube. And these videos are date stamped on YouTube, and they're also date stamped on StockTwits and Twitter. I always like to post my calls on objective third-party sites to ensure that our credibility is bulletproof. So let's get to the first clip from January the 30th. Amazon.com weekly chart. We're not as overbought relative to the S&P 500 or the Dow Jones Industrial Average or the NASDAQ comp, for that matter, on Amazon. However, I do believe that it is a short-term short. You may be saying, wait a minute, whoa, whoa, whoa. Amazon is outperforming the market this week. It's up while the markets are down. I don't think it's going to last. We'll go to a daily chart in a second. We'll talk about it. Now, on a weekly basis, we're trading at and above the 2 standard deviation Bollinger Band. Volume last week was pretty good, well above average. Now, the trade to the short side would be very short term. I'm not betting that Amazon is going to crash. But on a daily chart here, RSI 87.39 is extremely overbought. Can we move higher? Absolutely. I wouldn't dismiss it, simply because we've observed the fact that Amazon is trading with RSI 87.39. Doesn't make me like a little schoolgirl and forcing me to go running in and shorting the shares at the open. We are aware through our experience that it can move higher, and we're prepared to see that happen. But yesterday, you saw a change in price action. You saw sellers move in at the close. The same thing we saw on the S&P 500 and on the Dow Jones Industrial Average. Volume was still good yesterday, but a lot of that was selling at the close. How do I know? Here's the close. We put in a high early in the morning at 1431.39. We have a lower high. We broke down and confirmed the breakdown because we broke down below 1420, which marked the lows of the day, and sell pressure was on. We began leaning into the 3rd standard deviation Bollinger Band on a 5-minute chart, and a short squeeze occurred, but I think that we're going to roll over here. Look at the volume. This is not mom and pop selling 100 shares. These are institutions, and you don't want to fight them. Now let's take a look at my follow-up analysis of Amazon on February the 3rd. The calls that we've made on the market over the past several weeks, back on January the 16th, I posted on StockTwits that I believe that we were in a bubble in this market. I gave my rationale from Bitcoin to the US dollar to gold to the NASDAQ composite. And then as we continue to elevate to ever loftier levels on the market, on the 28th of January, I posted that traders were whistling past the graveyard. These posts, these videos are still on StockTwits, Twitter, YouTube. I post them on third-party sites to validate the calls that we are making here at the Contrarian Trader. The memorialization of these calls allows us to gain the trust of our viewers to ensure that the technical analysis that we're doing here is for real. And here's what I had to say Amazon, my favorite short. They reported earnings, they moved higher, but they closed well off the highs of the day. I think that Amazon is poised to move substantially lower. Note the lower highs on Ultimate Oscillator. Note the topping action on the 31st, the bearish key reversal on the 1st. You had earnings that salvaged, but we closed well off the highs of the session. It's a hollow-filled candlestick, and it's one of the few candlesticks that you do not want to see at the top of a trading range. The other one is a topping tail. The other one is a bearish key reversal. So we had three consecutive candlesticks, which are basically signals by the market saying, get out. So members, more to come here with strategy on shorting Amazon. What else are we bearish on? Okay, so those were the reasons why we decided that Amazon was going to be our short. So now let's walk through the logic of as to why we knew that Amazon was going to decline. You have a weekly chart of the S&P 500 in candlestick. You have Amazon here in blue, and you have the triple Qs in green. Why are we taking a look at all three of these? Well, you want to always identify whether or not you're shorting a stock that is a leader or a laggard relative to the S&P 500. In this case here, we had Amazon, which was leading the S&P 500, making it a very dangerous play for us. So we needed to know exactly where we were going to stop out. And the markets provided us with a line in the sand in which we would need to stop out of our position if Amazon were to exceed that price point. And I'll get to that chart in a moment. It'll be the weekly chart. But first, let's spend a moment here on the S&P 500 because we knew that the S&P 500 was going to roll over. How do we know that? Just go back to any one of my videos in recent days about the health of the overall markets, and I've been bearish for quite some time. I've been saying that this market has been in an unsustainable uptrend. You had RSI in the S&P 500 above 90. It's never, ever happened in history, and we were living on a razor's edge in this market. We were on borrowed time. So we knew we had the market that was overbought and ripe for a correction. We had the triple Qs, which were lagging the S&P 500. And Amazon is, of course, a member of the triple Qs. Now let's take a look at the chart of Amazon, weekly chart. I mentioned earlier, where did the markets provide us a gift? Right here, the week of January the 29th. What was that gift? What they told us was that if the shares of Amazon exceeded $1,498, you had better stop out of your position to the short side because you're going to have a whole bunch of Momo guys running in to buy up the shares and they would squeeze you. And we don't want to get invited to that party. So our primary question was answered. Where would we put our stop loss? Right above $14.98. So what else does this chart tell us? It tells us that you have a whole lot of sellers up there, and a lot of them were institutions as noted by this volume bar. Drilling down to the daily chart. Now the daily chart shows us that the markets have been sending us signals for a couple of days that Amazon was tired. Simply take note of the price action on the 31st. We rallied and we saw sellers move in and they sold strength. Then on the 1st, we had a bearish key reversal on the day. Very, very bad. But earnings were still in front of us. So Amazon reports, and then you have on the 2nd a hollow-filled candlestick, which you never want to see at the top of a trading range because that's a sign of indecision. And then fast forward into the 5th where they rallied the shares in the morning and we sold short into that strength. Now let's take a look at a 10-minute chart. And you can see here, this is where we opened up our position. And the markets were sending us a signal that they rallied the shares up in the morning. However, these wicks, shadows, topping tails, whatever you want to call them cupcakes. What they were telling us is that buyers back here were selling. And we also had institutions that we knew the prior week were dumping shares. So we entered our short position. And then as the shares plummeted later on that day, and we're trading down below the 3rd standard deviation Bollinger Band, we exited the trade for a 7.5% gain. Now, it wasn't my intent to close out the position in a single day. We were stopped out. We used a trailing stop loss strategy, and it wasn't my intent to close out the trade the same day, but the markets just handed us a gift and we booked our profits. Because remember, I mentioned in the prior videos that I had no intention of staying long in Amazon because I don't believe that the markets were going to go straight down. We didn't have a Lehman moment that would cause that. Therefore, we're going to see backing and filling in this market, counter trend rallies, and I didn't want to allow a profit to turn into a loss, so we kept a tight trailing stop loss order on it, and our computers executed it. I didn't need to sit in front of my computer screen. The markets took us out using a trailing stop loss order. And you can see that in hindsight, it was wise that we had used the strategy that we did because the shares plunged and were trading well below the third standard deviation Bollinger Band in red, and that's simply unsustainable. To avoid the technical jargon, the shares simply weren't supposed to be trading there relative to their 20-period moving average here in dotted green line. So we booked the profits again, 7.5%, a nice trade, a quick trade, and we reshorted on the 7th. I'll put together another video to go over why we entered that trade. It's along the same lines of as to why we entered the Amazon trade the first go around on the 5th, but with a little bit more precision on the 7th when we opened up the trade, and we were in that trade for a longer duration of time. So I'll put that together and I'll get it out to you folks. If you get any value out of these videos, please subscribe to my YouTube channel if you're watching it there. If you're watching this on the website, please enter your email address. We hate spam too. And if you watch this on StockTwits and Twitter, give me a follow there and you'll get all these videos in the future. Members, I will speak to you in the forum. Be well.